cloud services, which we really break into three key areas: cloud communications, cloud computing, and managed cloud services. We provide them to small and large businesses, and we also provide certain communication services to carriers as well. We've invested about $165 million to date into the business. We have our officers, directors, and board have invested 30% of that, so we own about 30% of the capital. My family's got in excess of $10 million into the business, so we have, to say shareholder alignment is an understatement. So we're the largest investors in the business, and we continue to believe that we've got a tremendous opportunity ahead of us. In 2012, October, actually the day that the hurricane hit in New York, we closed on a very exciting acquisition of a company called NBS, also a unified communication. Company, and it really transformed Fusion in three main ways. The first is the economic profile of the company has changed. In the first 9 months of the year, we generated $52 million of revenue. And over $1 million in positive EBITDA. That's about a 70% improvement in revenue, and the increase from about 2.8 million.
Shoes I haven't worn in ages, and I really fell down the stairs.
To $1.1 million in positive EBITDA. So transformed us from a financial standpoint. It also positioned us with a back office infrastructure and the network infrastructure and the people infrastructure to accelerate our organic growth as well as facilitate future tuck-in acquisitions. We have, as Nico mentioned in his speech, people are always very important to the business. I think we've been very fortunate to attract a top management team, board, and advisory board. As you'll see later on in the presentation, our management team has a fairly deep set of experiences, not only in the communication industry, but more importantly, an experience level that spans small entrepreneurial businesses, middle market businesses, and turnarounds. So regardless of the situation, as we evolve as a company, we really have deep experiences to both handle and manage the growth of the business. We believe that we're at an inflection point. The transaction that we've just concluded in October is one major accomplishment in 2012, but as you'll hear, where we positioned the company from a strategic standpoint and some of the other milestones we hit in 2012, we think we're in a perfect position today in order to accelerate the organic growth as well as accelerate the growth of the company through targeted strategic acquisitions. About the business and the industry itself. We've all heard cloud services bandied around. Everyone's got different definitions, but in essence, it is taking both infrastructure and software that is on-premise in someone's location, moving it off-premise, and accessing that infrastructure through the internet. I mean, that's cloud services at its most basic level. And there's four primary drivers that companies are moving into the cloud. The first is through agility and flexibility. They want to increase the agility of the company. manage the efficiency, make their companies more efficient. They want to reduce costs, and they want faster time to market. And as you'll see from this slide here, it actually shows that companies that have moved into the cloud, with one of those areas driving the decision, it has dramatically increased their cloud penetration as they've first taken the leap. The cloud services. But it is a very large market, and it is fast growing. So today, cloud services is about a $100 billion plus marketplace. 62% of small, medium-sized businesses are expected to use some form of the cloud in the first half of 2013, and that compares to 48% in 2012. So that type of shift we expect to continue to see. Cloud communications itself as a standalone is expected to reach a $20 billion. Market, again, very, very fast growing, with 75% of all enterprises with some form of unified communications in 2012. And actually the fastest growing area is cloud computing, that's in excess of a $200 billion market. And it's growing in excess of 40%. So as you'll see, all of the areas that we're focusing on, very large market, very fast growing, and it's on the cutting edge of what the IT and communications industry is evolving into. We have four main strategies as we evolve as a business. The first is we want to continue to grow organically. And I've mentioned that a couple of times because it's important to our future. If you look historically in the company, we have a very strong business development capability, but our operational infrastructure historically has always been limited. Well, with the acquisition that we've just completed in October, we now have, again, the people infrastructure, the network infrastructure, and the back office infrastructure to enable our company to scale organically on a much faster basis than we were ever able to before. And we do that both through a direct sales force, an indirect sales force, so we have agents around the country that are reselling, about 250 active agents that are reselling our products and services. And then we have the management board and shareholders that are instrumental in actually facilitating additional growth for the company. Secondly, we want growth through strategic alliances. We believe that the formation of a strategic alliance to expand our product set and to expand our distribution are very, very important because it accelerates the process of adding new products and dramatically enhances our strategic alliances. Our most recent alliance that we've announced is with Unisys, and I'll go into that a little bit later, but it's those types of alliances. As I mentioned, we also service carriers. We believe that's important to help our geographic coverage, as well as drive down the cost of the cloud communications portfolio that we have. So we want to accelerate that and continue to drive down our cost infrastructure as a business. And lastly, we believe that targeted acquisitions in the cloud services space, very, very important. A lot of fragmentation in our market. It's a lot of small businesses that are typically geographically focused and single or dual product focused. And we believe that as a very strong platform, we can add these companies into Fusion and take their products and services, upsell them to our existing customers, and dramatic synergies between the businesses. So we believe that the growth through acquisition is another important component of our business, and the dynamics in our industry are very favorable for growth through acquisition. a lot of fragmentation. Typically you'll find the management teams aren't experienced enough to take their company to the next level. And again, MBS was a perfect example of how we can take a company, fold them into Fusion, and have 1 + 1 really equal 3. A little bit about MBS. It was a company started in 1998. It was the predecessor company was actually sold to WorldCom, and this is a team of people that have been together for about 20 some odd years. The company was generating $27 million approximately in revenue and nearly $5 million in positive EBITDA, 18% EBITDA margins. The business was 95% monthly recurring contracted revenue. Monthly recurring contracted revenue. That means on January 1, you know what the year looks like in addition to the growth we plan for the year. So it's very important. Over 4,000 customers, very low churn. The company has really built its business through the reputation of execution, which is, again, very, very important. We bought the company for 4 times EBITDA. And as folks that may be familiar with the cloud services market, the multiples today range anywhere between 20 and 47 times in the public and private market. And we were able to structure a transaction for 4 times EBITDA for a purchase price of $19.6 million. And again, there's synergies both operationally as well as financially that we will continue to express as we report quarters throughout this year. As you look at our business services segment, we have a very comprehensive suite of products and services. They cater towards small businesses as small as 5 people and as large as 100,000. So we really have products and services designated for companies that span all sizes and geographies. Again, we do have nationwide coverage, and we are able to provide international services as our U.S. customers do dictate and need those types of services. The goal of our cloud solutions is to drive down the cost of ownership, to drive up efficiency and flexibility, and allow companies to scale much more effectively than they've ever been able to in their IT and their infrastructure requirements. And again, our focus on small to medium-sized business, we have over 4,500 customers. 95% of that revenue is monthly recurring, and we are seeing 15 to 18% EBITDA margins. Those are very, very healthy margins in a monthly recurring business. We also talked a little bit about the management. Again, you know, our management shareholders are very effective in driving additional growth to the business through our relationships. We have a portfolio that is we call seamlessly integrated. So whether you look at cloud communications, cloud computing, or managed cloud services, we really have a wide array depending on the requirements of the business. So spending a couple minutes on cloud communications, this is really, in the most layman's terms, providing voice and data connectivity and services through the cloud. And so you'll look at our services that are unified, so you can use it on your handset that sits on your desk, your PC, your mobile device, and really have them integrate and operate together. You have a whole fresh look at reporting capabilities, contact center capabilities. So it's really driving the efficiencies of the cloud into a business. And again, for those of you that are not familiar with cloud communications, just one quick example. In the traditional business, you bought a PBX. That PBX or phone system had a handset that sat on your desk, and the intelligence of that phone system sat in a phone room somewhere. You had your IT guy go in there and manage moving people, adding people. Well, in today's environment, we provide the handset itself. That handset plugs into the internet, and we actually host all of the intelligence of that phone system. So you can now manage, instead of having your own IT staff manage it and have to stand with managing and continuing to change out your on-premise system,
I don't have one. I don't have like a private or first class.
do that remotely. So you can access it through a web interface and continue to scale the company as needed without any additional capex. So it reduces cost and it also reduces upfront capital. Cloud computing is the second area that I mentioned. Cloud computing is generally where you've got applications as a business that you want to put into the cloud. So you've got your existing applications, and you want those applications to be managed on someone else's infrastructure and hardware. What does that do for you? Well, from a capital expenditure standpoint, it allows you to put your services and your applications on someone else's hardware, have them manage it, have them manage the upgrades, the scalability. I mean, everyone in here has experienced the need to upgrade their existing systems and software and infrastructure, and it's not easy. And companies today, regardless of the industry, are realizing it's not part of their core and they'd rather have someone else manage it. Very, very fast growing, and most companies, if they haven't already adopted some form of this, are looking to adopt it. And the last is managed services in the cloud. And this is where we actually provide not only the infrastructure in the cloud to produce and drive all those applications, but we offer the application itself. So as a quick example, we've just recently launched a managed security application in partnership with Unisys, a very, very compelling product, and it's something where we can go into small, medium, and large enterprises and provide them a unique security application that protects their data all through the cloud. That means no capital expenditures for the company and a nominal monthly recurring fee that organization needs to pay. That is very different from the traditional world of communications and IT. We have focused on the healthcare sector. Now, we do offer services to all industries. We believe the healthcare sector offers a unique opportunity for those that can penetrate the industry. Why is that? Well, a number of years ago, everyone may have read that the government has mandated the implementation of EMR, or electronic medical records, which means that healthcare organizations today need to digitize their patient information. What does that mean? They need to process it through a data network. They need to store it. They need to protect it. So if one can figure out a way to penetrate the healthcare market, it is one of the biggest areas, in our opinion, of spend. So we have created a vertical market targeting the healthcare industry. Just in 2011 alone, you're looking at 2012, you're looking at close to $15 billion of spend in the IT and telecommunications market within the healthcare market, and that's expected to grow dramatically. When we started focusing on the healthcare market, we started with a very large and exciting contract. We secured an exclusive arrangement with one of the largest healthcare associations in the entire country. Exclusive for all voice, all data, all cloud communications, and all cloud services. What does that mean? This organization has around 15,000 companies underneath their umbrella, which equates to about 125,000 organizations. We are now the exclusive provider for all of the cloud communications and cloud services to their membership. So they serve as a marketing engine for Fusion to market our products and services to their membership. It gave us a strong lead in the healthcare sector, and because this Ginny Hao organization is so well known, really overnight we became a real force within the healthcare division. So we walk into our customers or potential customers and we have significant credibility already in the healthcare industry. We also talked briefly about our strategic alliance with Unisys. Unisys, as I'm sure everybody may know, is a very forward-thinking company with some of the products and services. They had developed a service back about 8.5 years ago in conjunction and for the Department of Defense. It was such a compelling product that a year and a half ago, the DoD allowed Unisys, through a lot of lobbying, to commercialize this product. And what this product does is it actually cloaks or hides the information that you're trying to protect. So whereas traditionally in security, you either surround your information through a firewall or you protect your information through encryption, this actually cloaks the information so a hacker can't even see it. So we were able to secure an arrangement with Unisys that gives us nationwide distribution rights and a number of other things that we think are very exciting as part of this relationship. But we now have one of the more exciting cloud security products, our belief is, in the market. security, as we probably will guess, is very important to us in the healthcare industry. So as we penetrated and started really focusing on the healthcare industry, security is an important component, and we've already begun to get significant enthusiasm from our current customers and prospects about this security solution that can be and will be integrated into the rest of our cloud services that we've offered as a company. Our carrier services, I briefly talked about this. We are contracted with almost 300 carriers around the world that handle our voice traffic. So again, from a competitive advantage standpoint, the cost that we have of delivering our cloud communications is lower than almost anybody else that's in our marketplace. So it really gives us not only increased margin opportunity, but obviously as you start getting up market into the larger enterprises, it does give us a significant competitive advantage when compared to other folks in our marketplace. Here are some of the customers that we do have contracts with and providing services to. And there's two interesting parts about this slide. The first is, obviously, we have some great names that show and express that we can, in fact, deliver services at the upper end of the market. So we've got companies that range from an Emirates Airlines to a Century 21, a Le Sportsac, WR Grace. So we do have very, very good names as customers. This is obviously a small representation. The second part that's very interesting is very few of these customers do we provide a lot of services to. There are a few of them that we've penetrated quite considerably. But if we just took our business and concentrated on our top 150 customers, there's a tremendous amount more growth opportunities within our existing customer base for our current products and services and for new products and services that we're planning on launching throughout the year. So as you look at this list, it's not only an impressive list of customers, but it also represents a significant opportunity for organic growth in our business. Management team we spoke a little bit about. Briefly, my background, I started as an investment banker at Merrill Lynch. Ended up getting the operational bug and was hired by one of our clients called Oxford Health Plans. Ended up becoming their corporate director of operations and worked with them. If folks remember, in the mid-90s, there was a significant turnaround at Oxford. I was involved with that experience at a senior leadership level. When I left Oxford, I got into communications. We built a nationwide company providing voice and data networking services. That business grew from $175 million to about $1.4 billion. So we grew the company very rapidly. Don Hutchins. Don was involved with small entrepreneurial companies and also managed an $850 million business as the CEO of the business. Jan Serra, our head of corporate marketing and business development, managed a $300 million business as the president of that unit. John Kaufman was the head of NBS, the CEO of NBS, is now the president of our business services segment. And as I mentioned, John actually sold his predecessor company for WorldCom, ended up building that to a $175 million business in the communications space. Russell Markman's been working with John, again, a very successful entrepreneur, has built a number of businesses. And Mark Gelberg is our VP of Finance and Controller, actually sitting right here. And Mark has significant experience, obviously, in finance, as well as managing in public company environments. So, very strong team, capable of not only managing the changes within the industry and the evolution, but also understanding how to scale a company, which, as all of you know, in the microcap and small cap space, that's an important skill set. Our board of directors were chaired by Marvin Rosen, who is standing back there in the back. Marvin was a named partner at Greenberg Traurig, was also in the mid-90s, became President Clinton's finance chairman. Phil Turitz was the co-founder and treasurer of a large energy company. Larry Blum, who is also here, right there. Larry's one of our directors and was the chairman of Racklin, one of the largest Florida-based accounting firms for 17 years. Alan Brumberger, a very well-known finance executive. Mike Del Giudice, former chief of staff for Mario Cuomo, currently on the board of Con Edison, and recently stepped off of Barnes & Noble, very active in the private equity world. Julie Serving, probably needs no introduction. Paul O'Brien, the chairman and president of NYNEX New England Telephone. Jack Rosen is the current president of the American Jewish Congress. And Billy Rubin down here in Florida. Billy is a very successful, has a very successful lobbying and consulting firm, and also served as the assistant state treasurer for the state of Florida. Advisory board, Johnson Nunes Sr., former President Bush's chief of staff. Fred Salerno, former vice chair and CFO for Verizon, but on the board of Akamai, Viacom, Popular Inc., and a number of other businesses. Ken Sunshine, besides growing up through politics as the chief of staff of Mayor Dinkins, is now one of the most successful public relations executives in the country. Tony Obergos, very, very well-known lobbying firm in New York, and was the former director of executive services for the governor and the head of the New York and New Jersey Port Authority. And Vice Admiral Al Konetsky, very, very strong in corporate America. He's a top advisor. So that's a little bit about the team, and as Nico said, it is the team that drives you forward. We're very fortunate to have a strong operating team, a strong advisory board, and a board of directors that have supported us not only from a financial standpoint, but from relationships and experiential standpoint. It's very important in the future of our business. Just a brief financial overview, because it seems I've got to wrap up. This the impact of MBS, and it can't be highlighted enough. As you see in 2011, compared to the pro forma results of where we are with the MBS acquisition, our revenue increased about 70%. And you see our EBITDA, our adjusted EBITDA, going from, and just this is the first 9 months, by the way. Going from approximately 2.9 million in losses to over 1.1 million for the first 9 months of 2012. So it is a very dramatic improvement in the financial picture of the company, and I think, again, it provides us that foundation that enables us to grow the business organically much faster, as well as through targeted acquisitions. This is also very important as you engulf yourself in our industry. ARPU is very important, and that is the average revenue per user or per customer. Now, as we look at customer locations, which numbers around 40, we have over $550 per average revenue per user. That's probably about double where our industry is. As you look at actual customers and not customer locations, our ARPU actually increases to over $750. We to continue to see that to rise, but that is the result of focusing on larger companies, as well as focusing on making sure that we sell our customers an array of products and services that allow us to continue to generate more revenue per customer that we take on. Just some quick financial highlights. In order to fund the acquisition of MBS, we did raise some capital, about $6 million of equity and $16.5 million of debt. That transaction, or those transactions, closed in October, right before the acquisition closed. We have, with the MBS acquisition, an additional $27 million of revenue. We are now EBITDA positive. I can't say that enough. It's a very exciting time for our company. We had a 40% increase in ARPU over the last 2 years, again, focusing on the larger customers and penetration of our products into those customers. Our gross margin in the business services side is about 50%. Very low churn. The market is a little over 2%. We run at about 1.4%. And again, business that we bought was generating $5 million in positive EBITDA, but we are expecting $2 million of annual synergies. So as you look at what we actually bought as a business, we bought almost $7 million of EBITDA contribution for $19.6 million. So again, a very, very strategic move for our company. So why Fusion? Basically, we're focusing on a very large market opportunity, very, very fast growing. We have a compelling strategy, as I think all of you have now heard. We consider ourselves very unique in the marketplace, and I think our positioning is also unique within the market, and our people to execute. I don't think you'll find on any company that's in our market. We have a great team, strong momentum with the acquisition of NBS, the conclusion of the Unisys transaction, as well as the exclusive deal with the Hospital Association. I think we've got strong momentum to bring us into 2013 and well positioned for growth, not only organically, but we've got a number of acquisitions that we believe could be a great fit for Fusion. We are focusing on both the organic story as well as acquisitions. And lastly, I think that based on where we are as a company, I think it provides a very significant upside for those investors that come in now. And again, as it is public information, my family just purchased another $1 million of stock in the last 90 days. So it's something that we obviously are supportive of, and we think that there's an opportunity right now to take this company to some significant levels. So with that, I think I've landed right on time. So if there are any questions, I'm happy to answer any questions. And if they're hard, you can direct them at Mark. Other than that, I'll take the rest of the easy ones here. I've been the CEO of the company for about 4.5 years. Prior to that, I held a number of positions with the company. Yeah, questions now? Any other questions? There's a significant market, and again, a lot of these companies are, let's call it $500,000 in revenue to $50 million. So there are. No public statistics, but as you look around, because we're in the space, we tend to get a lot of deal flow. So I think that there are companies that are out there that are good companies within our space. Not all.
Hey? I don't like this, keeps buffering. It's getting on my nerves. Oh, let the bloody mouse.
Fit. I mean, we're only looking for accretive acquisitions, more companies that can add to our product portfolio. But we are very, very, very focused and very rigorous about what acquisitions we're willing to take on.
I'm second out of 12 then.